So, just tell those people, stay at home, and everybody else just go about your life. Maybe wear a mask, whatever. But if you get COVID, you'll be sick for a little while, but you'll get better. It's like, because the only reason that we shut down the economy is because we thought everybody was going to get bailout money. Everybody was going to get PPP money. Everybody was going to get extended unemployment benefits. So, hey, it's no problem. We can all take a long vacation and wait for COVID to blow over, and nobody's going to suffer because everybody's going to get paid, except they're going to get paid by the government instead of their employer. Well, it doesn't work, because they weren't working. It was all inflation. But I think if individual states knew that they were on the hook for the consequences of any lockdowns that they required or anything like that, they would have thought twice. I mean, nobody did a cost-benefit analysis. Everybody thought about the benefits of a lockdown. Yeah, maybe we'll have fewer COVID cases. Okay, but at what cost? Well, who gives a damn? There is no cost, right? It's all coming from the government, federal government. It's all coming from the Federal Reserve. So, I mean, it was a horrible moral hazard that was created. And we had the worst combination of monetary and fiscal policy imaginable. We prevented people from working, and then we gave them more money for not working than what they earned when they were working. I mean, you couldn't imagine a more inflationary combination of policy than that.
Well, I think this is a perfect example of how, really the free market has not been allowed to exert itself, to keep the checks and balances that a free market would, that choice would. So how perverse has, let's say, the education system or these pension systems become because of government intervention? Has this just, driven up costs and really risk as well because of the government guaranteeing these assets?
Well, of course. I mean, first of all, education is very expensive thanks to government. Government has bid up the costs by providing people with subsidies and guaranteed loans and direct loans to go in and pay whatever price a college or university wants to charge. There's no real free market forces at work there. And even, K through 12, you have all these government-run monopolies on education where the parents really have no choice. They don't have the money for private school, and they're being taxed to, pay for the public schools. And the public schools have a captive audience. So, their real goal is to enrich the educational establishment, which is the bureaucracy, the teachers' unions. I mean, no one really gives a damn about the kids because there's no free market competition to win the business of the parents. So we would have a much better education system. It would be far superior in quality and much lower in cost if the government got out of it. But of course, no, everybody wants more government. And the more the government destroys education, the more the public thinks we need more government to, fix it when the government broke it. They just don't understand that. You mentioned the pensions. Yeah, a lot of the pensions are underfunded. Look what just happened with the Teamsters pension and a massive bailout. Why are these pensions underfunded? Because the government guarantees them. Without government guarantees, they wouldn't be underfunded because the administrators would, have to make sure that the contributions were adequate to meet the demands. If not, they would have to reduce the benefits or increase the contributions. Plus, I think the people who are in charge of making the investments in the pensions, they've been led astray by the Fed. They've been investing in overpriced stocks. Meanwhile, they haven't been able to earn yields on bonds because the Fed has artificially suppressed interest rates. Traditionally, that's where a lot of the returns on pensions come from, is to come from interest that they earn on their bonds, because interest payments are more certain and you can match your income with your liabilities when you know what your income is. But when all of it is just gambling on stock prices, you have no idea, where stocks are going to go in the future. So a lot of these pension funds now just gamble. And of course, when they bet wrong, well, now the government comes in, which is a terrible moral hazard. That's what they did with housing, with Fannie Mae and Freddie Mac and all these guaranteed mortgages, and with the whole banking system for that matter. All the bank accounts are guaranteed by the government. So there's tremendous risk in the banking sector that would not be there absent these government guarantees. If the government didn't guarantee your bank account, you would care about what the banks did with your money. And so the banks would know you would care because they would have to compete on soundness, on safety. But they don't compete on those things because no one gives a damn. thanks to the government.
Mm-hmm. Yeah, these examples of free markets being allowed to exert themselves, it's just so crazy to think that the government has to step in and intervene at every step of the way. You recently gave the example of Alcoa on one of your recent podcasts being broken up and not being allowed to succeed because it was a great company that was efficient, right?
Yeah, I mean, the people complaining about Alcoa were not the customers, it was the competitors. Mm-hmm. But, we don't need competition to benefit competitors. We need competition to benefit customers, the public. And if the public is served with fewer competitors, then that's fine. Let the market function. A lot of companies were broken up that, were doing a very good job, and they should never have been broken up. And the losers were the American public that was denied the benefits of the efficiencies that those companies had been able to create. And you have competitors that aren't able to be as efficient, looking for the government to step in. It's like I'm running a race and there's a guy in the race that's faster than me and I'm trying to get the government. Well, can't you break one of his legs so I can catch him? It's not fair. He's so quick. He's got such strong, look, if somebody is better than the other competitors, then good, and eventually, somebody else will come along that will be able to compete. But you can't keep crippling the people that are doing well because, that you think that gives them an unfair advantage to others. But, look, another example, look what's going on right now with Sam Bankman-Fried and FTX, because they're saying, oh, look at what happened. This just shows we need more government regulation, as if regulators would have prevented this. Look, the people that were dumb enough to give this guy their money would have been dumb enough to do it even if there were government regulators involved. In fact, he was paying off all the politicians. You don't think he would have paid them off even more if they were regulating them? Look, Bernie Madoff was regulated by the SEC and the FINRA, which at the time was the National Association of Security Dealers. So he had two regulators. Yet he got away with his scam for far longer than Sam Bankman-Fried did, right? Under the watch of regulators. So without any regulators at all, FTX collapsed a lot quicker. In fact, the original Ponzi scheme, Charles Ponzi himself, his scheme only lasted for not even a year. It fell apart. It got ferreted out by the media, by investors. We didn't need government to expose Ponzi. He was exposed in the free market because there was no SEC or FINRA back then when Ponzi was around. And so the damage that Ponzi did was contained because he didn't have government regulators protecting him the way Bernie Madoff did. Bernie Madoff was able to get away with a much bigger Ponzi scheme than Ponzi because he was regulated. And so that's what we need. We don't need more regulation. What happened with FTX doesn't prove we need more regulation. We didn't even have an SEC until I think 1932. The New York Stock Exchange started in 1792. 140 years we had no SEC. We were better off without the SEC. There was less fraud than there is now when the government wasn't there, because the government is always corrupted. Whenever you have regulators in an industry, they become corrupted and captured by the people they regulate. And then what happens is the regulated industry ends up becoming almost cartelized by the government, and they use government regulators to keep out competition, to make it harder for new companies to enter the industry and compete so they can have outside profits, excessive profits. Meanwhile, to the extent that they are ripping anybody off for committing fraud, they just bribe the regulators. And they keep on doing it. And now the public just assumes, well, there must be nothing bad going on because, the regulators keep saying everything is good.